So what's going on in the housing market when it comes to foreclosures? There's different names for them in every province. Like some BC, it's like called quarter sale. In Ontario, it's called power of sale. And foreclosure still exists. It's a slightly different legal. What's it all mean? It all means people couldn't pay their mortgage, and the bank legally, or whatever lender, the bank or the private lender or whoever it is, takes the house away from the homeowner. They're evicted, and the house is sold. It has to be sold under MLS. There's a bunch of rules about it, but that's what it all means. It means that people can't pay their mortgage and eventually, through a legal process, lose their homes. Is there's more of that going on? A bit, yeah. Maybe not as much as people might think. We're going to hear more about it in the coming months because probably the recession's here. And the biggest impact on people's ability to pay their mortgage is employment. We read about layoffs. We read about Canadian Tire, several banks, insurance companies. We hear about it all the time that there are layoffs. So what does that mean? If those people are laid off and they have a mortgage payment, maybe they can't pay their mortgage. Maybe they're fine. I don't know. Dual income houses might be okay. But we know that the pressure builds. So how does it all work? Where should we look for it? And what will be the outcomes for the banks and for everybody else? Well, first of all, it's probably not going to be as bad as you think, because even though there will be more of it, and even if the recession comes in strong and it's a tough recession, there will be people lose their homes. But here's what's different than has ever been before. The banks, since 2016, have effectively become super select lenders. What do I mean by that? There was all kinds of changes in mortgage rules called B20 and B21. And what's ended up happening is the banks became very, very hard to get money from. I know if you've got a bank mortgage, you say, it wasn't that hard. But trust me, it's a hell of a lot harder for some people than it might have been for you, because there's huge growth in alternative lending and private lending, massive. It's the biggest growth. It also meant that the banks got out of some lines of business. Like, you rarely ever see a bank doing an individual construction mortgage when somebody wants to tear their existing house down, build a new one. You hardly ever see a bank doing that. That's all private mortgages, some credit unions, a few specialty lenders. That's it. Self-employed people have a much tougher time getting a mortgage from a bank than they used to prior to 2016. So all those people are out of the system. They've been out of the system for years. Everybody who's doing construction, doing minor development, doing self-employed people who might be possibly more affected by the recession. What has ended up happening is the banks don't have a lot of risky loans on their books. They don't have a lot of risky mortgages on their books. So who does? Well, typically that falls to the domain of private lending. Private lending has grown in the last couple of years in Ontario particularly, about 258%. 258% it's grown. So it's still small, but it's still a bigger part of the loans that might get in trouble in a recession. Also, some other lenders who specialize in alternative lending, some of the small banks and some of the credit unions, they've got some more exposure. And that's what we see when we look at it. We see where we see a power of sale, where we see a foreclosure, we see that typically it is not a bank. It is not a bank. It is one of these other types of lenders. Now, is that going to change? Are more banks going to have exposure? Yes, they will. There will be more exposure from banks. But in all likelihood, whatever you read that it's going to get really bad, whenever you see the stuff in social media that, hey, it's going to get really bad, and the banks are going to be in trouble. No, the banks are not going to be in trouble. And I know that's counterintuitive when there's people losing jobs and people might have to sell their homes. But that's the other thing. Sometimes people know they have a problem. They just sell their homes, okay? They don't wait for the bank to force them to sell. That's not the way it works. They know they have to sell. They want to get some money out of it, so they sell their homes. And you never know that could have ended up as a foreclosure. What I'm saying is it's not going to be as bad as people think. It will put more homes on the market. Yes, and we're seeing it today. There's increase in inventory all over the place in Ontario, parts of British Columbia. There's more inventory coming on, not selling. Eventually, those people may have to drop their prices. Some may wait for spring, but still, there will be more homes for sale. There will be people who will feel they have to sell their homes. But will this end up with the banking system in trouble, with CMHC in trouble? Honest to God, unless there's something really, really different coming that anybody can see, no, I don't think it will. But will there be more homes in the market? Yes, there will be more homes on the market. There may, sadly, for those people who have to sell, but sadly, I mean, it's sad. You got to explain to your family that you've got to leave your house. That's damn sad. And it's a shame. What it does mean is there's going to be more homes available, theoretically, and hopefully that pushes some prices down. And ultimately, in Ontario and British Columbia, we have batshit crazy house prices, and we could use a little bit lower cost for homes, a little bit better chance for young people to get into the market. I know it's a sad way to do it. Probably is going to happen, though. We'll see some more people who have to sell their homes, but the banks won't be in trouble. I mean, I've been watching this carefully for 18 months. I see the trends, and it's going to be fine for the banks, but it's going to be pretty damn lousy for some families. So sorry for that.